Oh, sorry, I forgot I was muted. Good morning, everyone. Wonderful morning to us all. Welcome once again to Valley Academy, which is a morning market review where we make money day. My name is Victor Abola, and I'm going to be your host for this morning's market review. But first things first, let's see. Where's my So first things first is to check our fundamentals today, but let me reload this. Okay. For I think we have enough persons. I think quite a number of persons to edit this, so there's no need to wait any longer. So let's just dive straight into the review. But before we go, I'd like to lay this foundation that you see, trading in itself, it's not difficult, but at the same time, it's not that easy, right? It's not difficult in the sense that it's not hard to learn, but it's not that easy in the sense that there's a bit of complexity which has to do with your psychology. So you just have to have that mental strength to do it, okay? So I encourage you to just pay attention, get a strategy, focus on that strategy, refine the strategy, make sure the strategy has an edge, which means that out of 10 trades, you win at least 5, 6, 7, 8. It's difficult to win all the whole 10 trades. Difficult. So in that case, what you do is manage your risk also. But at the same time, when you spot good opportunities, it's most likely that you maximize that opportunity at that time. I've seen instances where, opportunities are spotted and somebody makes over $10,000, $5,000, so make like 1 million, 2 million, 3 million, 5 million, 10 million on a single trade setup, just one single trade setup. Now, all of that is as a result of volume. There are certain things you cannot trade if you don't have some good volume, and there are certain things that you cannot trade if you are too scared to trade it. Now, they are very, very profitable instruments. Most of you here know that if you trade indices, you make more money than trading currencies, right? So a lot of persons here tend to trade things like gold, commodities like gold, oil, even indices. They make a lot of money. But what you are doing wrong is that these things are big boys that you need to have a good account in order to maximize profitability in the market. So let me, in the course of doing the analysis, you will understand some of the things I'm talking about. So we'll start from the fundamental analysis for today. Today being Wednesday, 4th of June, 2025. So basically, we are focused on the high impact news. We had that of AUD, GDP, was released, which came out bad. So at that point, we expect the Australian dollar to be weak. All right. Now, this is traded in the Asian session, formerly Sydney. So it's in the middle of the night, like very early in the morning. So we had it at 3:30 a.m. right here. Now by 2:15 p.m., which will be about 1:15 p.m. time here, we're going to be having the ADP non-farm employment change. This is a prelude to our NFP. It's a prelude to NFP, okay? Prelude to NFP. So this comes out the week of NFP. So we are expecting, if it's good, then the dollar should be strong. If it's bad, then the dollar should be weak. Also the Canadian dollar, that's 245, not 345. Canadian dollar rather. Bank of Canada rate statement, overnight rates. So we are also expecting this particular news, 245, and the outcome determines our trade. Now, we most times do not know. You cannot tell if it's going to be good or if it's going to be bad. So we wait for the outcome of the news. It brings volatility into the market, so you can trade out of that. Then ISM service PMI also is going to be coming out for the USD by 3 p.m. today. So now these are just some of the fundamentals, but do not forget that this is the week of NFP on Friday. So we have NFP on Friday, the average hourly earnings, non-farm employment change, unemployment rate. So this is this is going to be a volatile week today. Let me see tomorrow. Yes, tomorrow also. But tomorrow we have lots for the euro, USD also, as well as the euro. Then Friday, Canadian dollar and USD. Very volatile. All right. New York sessions going to be massive. Hopefully NFP moves. So that is the basic fundamentals that we have. So until that time, you can trade a lot of things. You just want to, if you are trading anything that has to do with the US dollar, make sure that your trade has gone in your direction before 1:15 p.m. to avoid stories that touch, because this can alter whatever technical analysis that we are trying to do. Okay, so hopefully that is not the case. So let's move on to our charts. All right, so I think I have USD here. I have USD right here. So for USD if you look at where price has been coming from, you see that there's this massive high here, and if you zoom out further, some persons will say, "Oh, this is a downtrend." No, not really. Let's go to our 4-hour time frame. Price was dipping on 4 hours before, right? Price was doing some massive dip on 4 hours. So, but right now, price has stopped that dip. So we can see price is trying to push up. Now we are having higher low, a high, a lower high, higher high, a higher low, a higher high, equal lows. All right. So that is what price has been doing recently. So it is no longer a downtrend. Price is beginning to shift up, beginning to shift to the upside. This 4-hour time frame. I went to my 4-hour time frame. I zoomed out to see the direction. And if I go to a much higher time frame like my daily, you see that mostly we have been in an uptrend, right? This low is the lowest that price has come in terms of retracement. I like to use any green for my lows for support. So this is forming like support levels for us right now. In recent time, this has been the lows it has tested after getting to this high, got to this high, okay? All right, so after testing this high for the second time, came to this low, creating another higher high, came all the way to this low, created a high again, came all the way to this low. So this is a very strong support area. Price just recently bounced off that area on our daily time frame. Okay, and also on our daily time frame, price gave us equal lows. So what I'm trying to do is today analysis, I'm trying to focus on some specific zones that can be used to look for setup. So my daily, I have these equal lows. This came here, pull up, came back here again, right? So look at how it looks like on my 1-hour time frame. That low, there's a massive low down, yeah. Then the recent one I drew is here, isn't it? Okay. So lastly, if I'm to take out this one, you notice that it has come to these levels before. Okay, you see that price has come to these levels before, right? So it's also a strong low on my 1-hour time frame. Also a strong low on my 1-hour time frame. So price has been bouncing off this area, not once, not twice, like 3 times now at least, and every time it pulls up. So what I want you to understand now is we just try to get our directional bias. We can use market structure. Sometimes you can look at your higher time frame and look for where price has gotten to previously and stopped. And now it's back there again, just like we identified right now. So having done this, what we are now seeing on our 1-hour time frame or possibly even 15 minutes time frame is price is beginning to ascend. That means price is beginning to pull up, right? Is beginning to ascend, is beginning to pull up. So what we are expecting now is where do we look out for our buy opportunity on USD JPY? Where can we enter the buy from? So simply put, I can use it on my 1 hour. I can look for my entry on my 15 minutes. If you go to your much lower time frame, what do you notice again? You notice that price is doing lows around this level, right? Just came to test this low again. Excuse me. Came to test this particular low again. So we are looking for buy trade on USD JPY. If I'm to be very specific, you see this sell. For there to be a buy, there has to be a sell. So this is what I'm expecting for USD JPY. And of course, if I'm buying from here, I will expect price to come out and take out this high that it just recently got. Okay, I'll expect price to take out this high that it just recently created. So if I'm buying, I can. So I'm looking for buy opportunities. So guys, this is for USD JPY. Worst case scenario is that price comes to this level again. To this level, my 15 minutes time frame. And in case village people visit this chart, then I can have this before price massively pulling up again. Massively pulling up again. Okay. Massively pulling, but I'm not expecting this to happen. I expect that from here right now, price should just pull up. Okay. So what is possibly holding price down is the strength of the dollar. So the strength of the dollar right now is not as strong. The JPY is very strong right now. So that is what is causing the delay. But look, I think we're having some pull up right now already. So guys, we are ready on this particular setup. Let's see. Let's see. I like having this set up this way. So I'll be looking for price to take out this high to give me new highs. Then I'll be looking out to stop out in case price can come anywhere around here. Okay, so this is my USD JPY. Let's look at GBP USD. Okay, I don't want to use a cheat code actually. If I want to use a cheat code, once I just apply this like this, I'll just know where price is going to, and I'll just look out to take my trade from there. Simple as short. Okay, so but let me do a naked analysis for you to see. So for GBP USD rather, price has been printing higher highs and higher lows. In fact, look at it on a much higher time frame. You see that we have been very bullish. Like we have been very bullish. Okay, very bullish for a while right now, and most recently we are still quite bullish. Let me make sure this trend line is fitting well. Excuse me. And most recently, we are still bullish. Okay. So there's every tendency that price should continue being bullish, except because normally price will not just keep going up and up and up forever. At some point, it needs to do some retracement, right? If you understand your market structure very well, which we don't really have much time to go into. That's why I'm not doing that. If you understand your market structure, but for the sake of this particular session, let me just do a little bit of it. A little bit of it. Okay. So how do you do it? You want to mark out your swing structure, your swing highs, your swing lows to know where exactly you are, the zone you are trading in. Okay, at the moment, because price shifts a lot. Or price shifts a lot. It doesn't remain in the same spot for a long time. Okay. So in that case, how do you know where to attack price from? So let me start from this particular point here. So let's say I have this as my low, okay? Then obviously I'll need a high that brought price to retrace. Now, this is this zone that I am right now. So price, whatever price is doing, is trading inside of this massive zone. Inside of this massive zone. As long as it doesn't break my low, we are still fine. So price took out the high to give us a new high. I shrink my chart. Then obviously the lowest point of that retracement is here. So this is my low, this is my high, this is my new trading range. So price is just trading inside of this low and this high. Okay, we don't have much time. So guys, we can already storm into our trade because price is moving already. Okay, price is moving already. Uh, if you notice what we looked at earlier, we looked at this. This was a high that was broken, price retested, became the low, right? That's one. Then we have another internal low all the way here. Okay, this place that was broken right here, this resistance level that was broken right here, it has done support. So what do you think price should do from here? What do you think? Should it buy? Should it sell? This is what I'm expecting. Just keep pulling up. Right? This is what I'm expecting. Just keep pulling up, okay? Excuse me. So GBP USD, yeah, we want to continue being bullish. We want to continue being bullish. I don't want to confuse you with so many strategies, but I just want to confirm something for my moving averages. I want to make sure price is above moving average. Let's see, 21. Okay, then 50. Let me apply my 50. Okay, 50. Then let's make it light blue since I have green on my chart here. Yes, price is back above moving average. So yes, we are bullish, guys. The same thing, I think USD JPY, GBP USD also is bullish, right? At least for today, price can be bullish. Now, the only challenge is that price can get to this high again, but I expect price to take out this high, take it out, then at least all the way to these levels right here, at least. But that's what I'm expecting for GBP USD. I think it's quite straightforward. Quite straightforward. Right. Okay, so NZD USD. I just want to quickly finish the currency pairs before we move to other things. Before we move to other muddy waters. All right, so NZD USD was massively bearish before, stopped being bearish, and now price is giving us the bullish moves. What do I mean by bullish moves? When price start pulling up, start creating highs and highs, especially on your higher time frame. This is my 4-hour time frame. Remember, we want to use our higher time frame to mark our zones, then go to our lower time frames to look for entry points. Okay. Let's see. Let's see. Just a moment. Okay, NZD USD. Okay, so we've marked these lows right here. These lows right here. Then we also have this particular low right here again. This particular low. Okay. So first of all, there are two ways to do it. Okay, you can mark a previous resistance area to check if price came back down after breaking it to bounce of that area. So this is the last resistance area, right? So if we extend it, you'll notice that price came to bounce off this level. Okay, and as it did, you notice we are having ascending highs. So you see this one, price pushing up, pushing up, pushing up, pushing up, pushing up. So we can continue it this way, mark it as our trend line. I'll mark this as our trend line. All right. So it's just a guide for us to know what we should expect from the market. That's one. So there are a lot of things I like to just, but trading, you cannot understand all in one day. But I'm just trying to summarize some of these things. So basically, I look for areas of liquidity because for price to go up, first, it needs to come down. For price to go up, first, it needs to come down, or it needs to do a bit of range to gather momentum. Like range first before going up. Okay, so either it came down a bit and did a massive move, right? Or it just ranged before pulling to the upside. Okay, so before price goes to the upside. So let me just show you a simple trick. Let me show you a simple trick, right? Let me show you the simple trick. So let's say we have this massive move right here, this massive push to the upside on NZD-USD. Now, after this move is done, like, I missed this move. So, but it shows that there is massive momentum for price to push to the upside. Buyers are dominant in this market. All you need to do is to look left. Before this massive move happened, just look left. What happened before it? It gives you a clue. All right. The present is fine, but the key to your success in trading is behind, not forward. You look behind, it gives you a clue of what will most likely happen again in future. So what we'll do is just inside of this particular move, look out for the previous high before it, the previous high point that price broke and pushing to the upside, which is here, right? Which is here. Now, as price broke this high, your job is inside of this massive push to the upside, inside of this massive push to the upside. Where did price do something like this pattern? Inside of the move, right? So here we have this one all the way down. There was this sell down before the buy up. There was this range. Remember I said it's either it just sell down before it pulls up or it range up, down before it goes, right? So you see there's a range right here before price pull up again. So you have 2 points of interest, 2 points of interest. So you mark the whole of that sell down, the whole of that range, all right? The whole of the range, and you extend it to the future. As well as this one all the way down. This one all the way down, the whole of the cell, you extend it to the future. These are the most likely places that price will want to continue going up from again. Because after this massive push, obviously there should be a retracement. Yes, there should be a retracement. Okay. So we are expecting price to come all the way down here. Sometimes, very few times it might not, but most often than not, price will come back into the point of interest and continue pushing to the upside. So I just showed you a trick of how to identify these levels that price are most likely to. So notice that price came all the way inside here, struggle, then eventually. So even if you have your buy, price will still go in your direction. Why? Because you are aligned with the current flow of the market, which is price is pulling to the upside. Okay. Now, price has pushed to the upside again, right? And it broke this structure right here, this previous high. Like I said, after a massive move, look left, okay? It broke this high, this move, sorry. Let me bring it back again. So you understand. You see this move, this one here, broke this level right here. All right. Now, as it broke this particular height right here, what happened? It quickly came to retest. It went up again, right? Now, what is price doing? Price came back all the way again. So inside of this move that broke this level, I have a continuation pattern. So sometimes price will do like this. Sometimes price will pull up. It might just go all the way, or sometimes after breaking, you will see a move like this, then another continuation move. So for it to keep going up, if you mark this area like this, if you mark this area, price is most likely going to come to tap it again and push even higher. All right. So this is just looking out for how the market works based on your market structure, especially when price is pulling in a particular direction. I know some persons are already on this trade. Some persons are already on this trade. All right. So what do you think price should do from here? Is it going to be buying or is it going to be selling? Should it keep pushing higher or should it go back down? What do you think? I need your responses. I need your response. Okay, let me see. Okay, someone said buy. At times. Yes, I need your responses, please. I need your responses. I need your responses. I need your response. Who else? Who else? I'm not seeing any messages. And guess what? Guess what is going to happen again? So, price has created this is a 1 hour time frame, right? So currently, price is creating this resistance area, and this is the highest point of it. So this, once price successfully goes above, then it can, the way it moves will determine how we follow it. So if it moves and it does something like this, let me bring this one back. So if it moves and it does something like this, price is dynamic. Price does not do the same thing the same way every time. It will do the same thing, but in different ways. Okay, so it pulls up. So if price want to continue pulling up again, what will happen is you just identify this sell down before the buy up. So price will now do this, pull into it, and finally going above. Like this is how price literally moves. Okay. So if you understand that concept, then trust me, you will win most of your trades. Most of your trades. Most of your trades. 9 out of 10, 8 out of 10. Worst case, let's say 7 out of 10. All right. You start winning most of your trades. Most of your trades. And guess what? With this kind of strategy of looking at the market, you will even quickly tell if price will not go in your favor. If price will not go in your favor. The moment price comes back down, so let's say if you enter your buy, ideally your stop loss should be all the way down here, right? That's why. Now, why is my stop loss all the way down here? Because the moment price breaks this particular level, to the downside. So let's say price comes back and it breaks this level to the downside. The same rule applies to when you are selling. Just flip your chart upside down. So it means that price will pull up and look for a sell down, sorry, a buy up before that sell down. So if this is the buy up, then obviously these are the buy up. Price will do this. Once it taps into this zone, it will then come all the way down. Hence, once it takes out your stop loss, just know that your directional bias has changed. So what I'll do is I'll wait for that setup to play out, then I'll go in for a sell trade. I've literally recovered whatever I lost on that same trade, on that same chart. I've literally recovered whatever I lost. Okay, so you are just flowing with the markets. You are in tune with the markets. You are one with the markets. You, to an extent, you can never predict the market 100%. Like, please just know this and know this. You can't. You can't be, the market is dynamic. The only time you can predict the market 100% is if you can successfully predict human beings. If you can, then obviously you'll be able to predict the market 100%. But as long as you cannot predict human beings, then definitely you cannot predict the market 100%. So NZD also are bullish, and price is still pushing to the upside. Okay. Uh, let's see if we can do one or two more currencies before we push. Okay, before we just all right. So my NZD USD, let's see what the flow is. Where is price pushing? That's the first thing you need to understand for you to have a successful trade is which direction is price heading? Which direction? Is it going up? Is it going down? So if you can find out your directional bias, then all you need to look for is your entry point. Okay, your entry point. So this is my 4-hour time frame. Now on my 4-hour time frame, okay, let me go to my daily LC. Okay, price. This is still the low that price still need to come to. So we can still keep trading downwards. We can keep trading downwards. Price is not yet there. So right. So on my 4-hour time frame, I can clearly see that price has been trading to the downside. Okay, so I'm looking for my directional bias to the downside. Okay, I'm looking for my directional bias to the downside. So I can see that there was this low previously. Excuse me. There was this low and this. Oh no, sorry, no, not at all. No, this is a downtrend, so I can't have low and high. I can only have high and low. Yes, I can only have high and low. Okay, so I have this high. Okay, so from this high that created this low, the price broke below this low to give me a new low and creating this new high for me. All right. So from here, we broke even lower. We broke even lower. I wouldn't want to take this one because it's too small, but here is better. So we broke even lower. Okay. And this is the bias retracement, this level. So price looked like it wanted to break higher. It pushed higher, but eventually still came lower. So it came lower to this level right here. And the retracement is this high. Okay, so we are trading inside of this particular zone. Now, I wish price was higher than this, it would have been better. Like it would really, really have been so much better. Okay, but unfortunately, price did not. So for us to sell, we need price to go high first. Remember the principle. Whichever direction you want to go, price will go the opposite first before it goes in that direction, right? It will go the opposite first before it continues in that direction. So what do I mean? You can see, let's say this zone here, before price took out this zone again. Okay, so before this massive sell, look at it. Look to the left. Look back. There was this high, right? Good. Now, price broke this particular level right here, isn't it? So we are expecting price to retrace back. For us to have a continuation of this sell, it means price has massive momentum to the downside. But for price to continue going down, it needs to retrace back, right? So the whole of this level, look out for that point where you have a buy before a sell or a range before a sell. So we have one here, one, right? And we have a couple of range before this sell, right? So we have another one. You can see this range before the sell, this range before the sell, but this range before this sell. Okay, so we have this range before this sell. So what do you notice? Price has to, it just has to. So if I'm taking my sell from here again, hoping price continues down, price just did not go down immediately. I had some drawdown, but eventually price goes in your direction. Okay, price goes in your direction. Now, we are now looking for price to break another structure, another level again, for us to have a good entry. Okay, the only thing that you want to do now is if price decides to go back to the upside, then you can have your sell. So if it does again, then you can have your sell. But inside of this move, we can have what we call a continuation move. A continuation. Before every massive sell, there should be a buy up. And before every massive buy, there should be a sell down. So the challenge now is somebody might say, oh, I see this massive buy now. Why don't I look for where it broke? Why didn't it broke this level? Why don't we keep buying it? It's because you are not following the direction of the market. The market direction is currently down, like down, down. So we are looking for opportunities to sell this market, right? So you're only looking for where market broke structure to the downside. Wait for it at that level again. So when market broke this low, significant one, I will, inside of this move that broke, where do I have a buy up before a massive sell down? I have one here. I have another here, right? So price need to go back there. This is like your supply zone, your order block before it can sell, right? So it needs to get back there before it can continue selling, like for you to catch this big move. So these are the kind of moves that I can catch like 3, 4. Sometimes you can catch 5, but it's difficult to catch 5 in a week, you know. So I can catch like 3 of them, you know, in a week. And with those three moves like this in a week, maximize profit. Why? Because if price is going to start falling again after this move has been made and it goes and it taps either from here or from here, it will definitely fall until it gets here. So price, so let's say we start selling from here, our overall target is all the way down here, which it has gotten to, right? So imagine how many pips on USD CAD. So imagine it is over 178 pips at least. Or if you target the whole thing, you maximize the whole thing, it's 181 pips. Imagine how much you make with the standard loss. Imagine how much you make with even 0.1 or 0.5, depending on your size of capital. So we wait for moves like this. Once we can find them, we massively, massively maximize profitability from moves like this, all right? So how do you recognize moves like this is what I'm trying to show you, okay? So what do we expect? Right now, we don't have a clear-cut opportunity on USD CAD. We only wait for price to pull up again for us to sell again. It can come back to this area or these areas we are selling from, right? If it comes back there, yes, so, and it's most likely going to sell because price is still on a downtrend. Now, is it possible that price breaks these levels and goes higher? Very possible. Very possible. If price goes higher, especially if you can go above this our swing high point, this level, this swing high. If you can take it out, it means that price is no longer doing on a downtrend. This is what we call a change of character, right? A CHOCH, change of character. Now, by this change of character, I will now do the direct opposite of what I'm doing here, which means you see this massive high that price recently broke above it. I will then mark the high. I will then mark this high. Then inside of this move that broke it, I'm looking for any sell down before a buy up, any sell down before a buy up, any sell down. Once I can find it, it gets there. That is where I'll be buying from to keep pushing price higher and higher, right? So this is how you get. So you must get your directional bias first from your higher time frame. You come down to your lower time frame and you look for opportunity to continue trading in the direction of your bias. Okay. Now this is what you can do. For those who are, let's say, you can have your SL here and you can have your sell hoping to drive it back to this level. But if you want to get the major move, then you need to wait for price to come all the way here or max here for us to have another massive sell opportunity to the downside here again. Right. So that's for USD CAD. Oh wow, our time is gone. Time is fast spent. Fast spent. Now, just let me see. I don't want to use this. I don't want to use this. This is a cheat code. All right. This same everything I'm talking about here is what I can do with that. So I don't need to start marking the zones. It's already marked over there. All right. So now look at this is good. Oh, almighty good. 5 minutes. No, let's start from the higher time frame. In fact, start from the 4 hours. Before now, you still notice that the natural directional bias for this guy is to the upside. Okay. Now this is the 4 hours. Now this same thing I just showed you. Now let's look at it on 4 hour time frame. On your 4 hour time frame. Okay. Your directional bias is to the upside. To the upside. To the upside. Okay. So that is your directional bias. So let's come to the recent points that we have, especially when price now takes out a previous high. Okay. So this is how it works. Now notice that price make this massive move here, which took out this previous high point. Now this is a new high. The same thing can happen if this one has gone up and taken out this one. We wouldn't be here again. Would have been higher. Okay, most likely higher. But price didn't take out this one, so that's why we are still lower. Okay, so until price trades zone by zone by zone, right? You follow price in that area. If it shifts, move on. So we call it break of structure. You now have a new zone to trade in. If it shifts again, you have a new zone to trade in. So what do I mean? This was the previous highest point. Price made some massive retracement to the downside. Okay, to the downside. Now, after it did that, it took it out. Now, notice that it should do a retracement to the downside. So, but this particular move here gave us a sell down before a continuation buy up, right? Now, that sell down, if you mark it, let's see, where is it? If you mark it here, the sell down, and you extend it to the future, wait for price to come back into it, you have a very good opportunity to buy again. You have a massive opportunity to buy it. This is very simple. So what you're going to be doing is, all when price was coming down, you are patient. Because someone would say, oh, why don't I sell? Because I know price should come here. It's not a should, it's not a must. Price can just, notice that price did another sell down before a continuation buy, right? So price does not 100% necessarily need to get there again. It did another sell down, the whole of this sell down before a continuation. Notice in that move, sell down before this buy, it sell down a little before a continuation, right? So it means that price can decide to come here and keep buying, or come here and keep buying. Right, so that's why we usually have different points of interest. So if you notice on our, was it USD CAD? That's why we have this level and this level. So we mark the possible areas, Sometimes you might have more than one, okay? You might have more than one. So here we have two. Don't ignore this one. In fact, there is still another one here, although it's not strong. I prefer more than one, We have this small one, this small one. So you can have this small one right here. Notice that at some point, price came for this last one. It came for it. Yeah, it did. So price doesn't just move like that. Price is moving towards something. So your job is to know where price should move to. Where price should move to. So let's say you are looking for somebody. You are looking for someone. and they told you that, oh, that person is looking for that person you are looking for. You ask, oh, I'm looking for this person, and they tell you, ah, that person, oh, I saw the person. The person told me he's looking at where he can buy fuel, right? The person went to buy fuel. Now, you know that there are only two filling stations in your area, just two. So it makes the job easy for you. So what do? Imagine those two filling stations are on the same street, like the same line, the same road. One is here, and the other one is like 5 kilometers, like another 2 kilometers away, right? So what you just do, walk towards the first filling station. If you don't find the person, most likely you find the person in the second filling station. So that's what we are talking about here. So, but you mark every point of interest where price can reverse from. So you have done your analysis, you are anticipating, and when it gets there, you execute. So we do three things. We anticipate, sorry, we analyze, we anticipate, and we execute. Right now, we are analyzing, right? So you do the analysis phase, the anticipation phase, then the execution phase. So we've analyzed. We've analyzed. We're anticipating. It came here. It looked like it wanted to buy. Okay, this is a 4-hour time frame. If you buy a little, it was struggling around strong. It broke it. It came to this point. This was where it now had enough momentum to keep pushing high. But remember, we are not yet here. We've not taken out this high. We've not taken out this high. So once we take out this high, it confirms that gold is very much still in an uptrend. Okay, but pending when it takes out that high, our trading zone is between this high and this low. Right, this high and this low. Okay, so now what are we expecting for price of gold for today? Now, guess what? Price has now been creating high, 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 high. Okay, it came down. For every time it takes out a high, see this, right? This little highs as resistance. What do you notice? It came back into that level again, right? Before it continues. Now, if it takes out this high, which I think it just did, I'm coming. I think someone's hand is raised. Let me just not forget my line of thought. Okay. So if it takes out this high again, let me look how it looks like from a 1 hour time. Okay. Someone wants to ask a question. Okay, please go ahead, please. Innocent, you can unmute and go ahead. I can't hear you.
Thank you, sir. Good morning, sir. Can you hear me?
That place you are is noisy.
If I hear me, please, I would like to know what time frame is the best.
What time frame is what?
What time frame can one apply using apply this strategy?
Okay, what time frame can you apply this strategy, right?
Yes, sir.
Yeah, the time frame is depend on your kind of trader. This is a 4-hour time frame. But I was looking at a 4-hour time frame. So I was on 4 hours before. Right now, for me to do it on the 4 hours, it means that I really want to wait. Like I can wait. Mostly, I'm a swing trader. If you are using higher time frames to do it, but if you want to do it, you don't want to wait too much. You do it on a lower time frame, like maybe your 1 hour. On 1 hour itself, you would even wait because this is 1 hour time frame. Guess how? When it broke above this height, it took you 1, 2, 3, 4, 5, 6 days for price to come here. But if you do it on 15 minutes time frame, on 15 minutes time frame, I think you can find much more trades. All you need to do is look for a previous high that price will break this level, right? Look for inside that particular move, inside this particular move that broke this level, just look for where you have that pulse and continuation, right? And I told you, it's either a sell before a buy or a range before a buy. It forms your order block for you, okay? So we have different points inside of this move. So we have this sell before this buy. This was the one it literally like obeyed. We have, so you mark every single point. This sell, massive one before the buy. If price had broken this level, this is where it's going to start buying from. Okay. So
Okay.
inside again, you have this level. So just whatever time frame you are looking at, however price moves will determine how you follow. So analyze, you anticipate, and you execute. So it's not for one specific time frame, but you must use your higher time frames to get your directional bias, which means should we be buying or should we be selling? Should we be buying or should we be selling? That's the first thing. You must know where you are headed to in the long run, right? I think that
Yeah.
answers your
Thank you, sir.
question. You're most
Thank
welcome.
you, sir.
You're welcome. Um, dollar edge on USD. I thought if dollar is strong, it will affect non-instrument player. Yes, but not exactly. Dollar can be strong. JPY can also be very strong. Dollar can be strong. CAD can be strong. So it will not affect them the same way, right? It won't affect all instruments the same way. Let me see. Okay. Our time is fast spent, but I really do you understand this particular strategy. So you can very effective strategy. You can use it to take trades. You can use it, and if you want to trade the reversal, like it's easy if you want to trade the reversal also. So let's say, even though I understand that we are bullish, like I understand that we are pushing to the upside, okay, but after price breaks this massive level and goes massively high, I know that price should return to the downside. Okay. Now, this one it's not a gamble, but out of 10, you might have like 5, 6 in your direction. Just make sure you have a good tight stop loss in order to take you out. This is a trigger. Okay. I don't think we have enough time to talk about that. So what am I expecting for gold for today? So this is what I'm expecting. Price took this move, this most recent move took out this high here, all right? And now just see the simple trick. See the simple trick. I have this continuation buy, sell down before this buy up, extend it. Now notice that this is what is stopping price. Okay, so most likely, what should we have on gold? It should pull up, right? Now, if it doesn't pull up and it's going down, good. The next one inside this move that broke, I have this sell before the buy. This is where we are now going to be buying from. The only condition for which I will stop buying, right? Where's my forward? The only condition for which I'll stop buying is if price can sell and sell and sell all the way and take out this level here and comes here, then price is no longer in an uptrend. It's now in a downtrend. Okay? It's now in a downtrend. But everything that is happening inside of this low and this high is still internal. We are trading within that particular structure right now. Okay, so gold, we are still looking at being bullish, right? But before we can go up, we need to come down first. So let's say, where's my 1 hour time frame? Okay, this is my 1 hour time frame. So price has come down now. So we expect price to keep pulling up. And if this guy is pulling up, I expect it to come to this high and even take out this high to give me, another high, but still inside this particular structure. Still inside this particular structure, right? So this is my expectation for gold to pull up, being bullish, right? What else? Lastly, US 100. We have time for that. Do we have time for US 100? Okay, let's quickly hide floating. Let's quickly, US 100 has started going already. Now, this same thing I'm trying to let you understand is what this is doing for me. This will do it on any time frame, like on literally any time frame. All right. So next week, Tuesday, on the 10th, is when we are going to be showing you. We're going to be showing you this particular strategy. Your account managers are going to let you in on it. Now, notice it has this change of character, a break of structure to the upside. So at that point, you notice that when it broke, it came back, it gave you a buy. You buy it and all. Now, you look at it again, another high. Price took out this high at this level. So it had marked out every point that price need to come to. Notice that there was this sell before the buy, it marked it. There's this sell again before the buy, it marked it. And most recently, right, this is a 15 minutes time frame that has marked this level again for buy, and price is buying already at this point. So for price to do so, price needs to come and take out this level. So we are still in that buy. US 100, we are still pushing higher. All right, we are still pushing higher because it needs to take out this level. I'm sorry, I can't mark it well. It would have been better if we started buying low. It would have been way, way better if you start buying lower. So you need to take out this level and possibly come to all the way here, right here. So sometimes if you miss some massive move, don't worry. Don't worry. You can still continue that move. Just wait for price to get to a particular point to continue. All right. So this is 9 a.m. already, and we have to call it a day. I hope you understand what I just said, so that everything I've just showed you, so that we can use this, easily to get lots and lots of opportunities to trade the markets. So your account managers are going to be sending you some messages. We're going to be inviting you. It's an online training actually next week Tuesday. Where we're going to be showing you how to use some of these things to trade. All right. So thank you so much for your time. Looking forward to you having a very beautiful day. All right. Bye for now. Gary, I mean, good morning, Luca. Good morning.